Welcome back. You're watching The Money Show with me, Kavita Thapliyal. And let's move on. Let's talk about the favorite investment instrument of senior citizens. Now, as per India Retirement Index study that was done by Max Life Insurance with Kantar, it's been seen that most preferred investment instrument is life insurance policy, which is followed by fixed deposit, RD, then comes health insurance, and then in the end comes mutual fund, SIP, and NPS. So let's decode this survey, let's figure out the trend, and let's also see where we are going wrong as far as retirement planning is concerned. I have Anil Rego, founder, CEO, Right Horizons, with me to discuss this further. Anil, good evening and welcome to the show. So is this survey and the data that's been collected surprising for you, or is what already expected?
No, actually, it's not surprising because I think for the masses, right, some of the traditional insurance is right on top. And if you ask them to plan for retirement, probably they'll think of a pension plan from an insurance company. Similarly, FDs, all of them are right at the top for people. Yes, I think what's always been surprising is maybe mutual funds, and equities sort of come at the bottom, which brings out two things that probably our penetration is so much lesser. But coming back to from a retirement perspective, right? It's very important for individuals to also beat inflation, right? And some of the avenues, will not necessarily beat both taxes as well as inflation. And so what it means is then you have to put in that much more capital to be able to achieve, the goal. So what I would think is really required is, uh, people start looking at having a balance between instruments, say, which they are comfortable with, but slowly start increasing, say, the composition of equity mutual funds, as you go forward.
Exactly. But Anil, let's also dissect the investment that's been preferred in life insurance. What kind of coverage are we talking about? Obviously, these are life insurance plus investment products. But over here, is it LIP? Is it ULIPs, or is it a normal traditional endowment plans, or money back policy that we're talking about? Where is the interest high?
Yes, so when you're talking about retirement, I guess a good part of it will actually be pension plans. And interestingly, pension plans, do not give you a life cover. You have some options which are there, but a typical plan, will not actually give you a life cover. So it's almost like somebody just doing pure pension for the requirement. Of course, there will be a good set of people who will also use the other life cover linked plans. So there you can have a combination of either a ULIP. So today, I guess ULIPs have become less popular, after various changes which have happened. I don't think advisors and agents are sort of distributing them as much. And the traditional plans is something which maybe a lot of them have. They could just have endowment plans. They could have money back plans. But yes, I would believe the top three would probably be, between pension plans, between, say, unit link plans, and, say, endowment plans.
All right. We also have to mention that real estate and gold has also been a part of this particular survey, and also, it has turned out to be as an investment instrument that senior citizens really prefer to invest when it comes to their retirement planning. But then, having said that, how excited are you, or what is the view on NPS making an entry in this list?
Yeah, definitely. I think that's a big plus. And you see, if I look at it, pension from an insurance company or pension, let's say NPS, right? I would think NPS sort of would win hands down. So that is because anyway, both don't give you life cover. So why not look at something which is like an NPS type of scheme? Yes, NPS also then gives the opportunity for that equity participation and inflation beating returns in the long run, right? So I think that has been a big positive, and I hope that that'll only go higher up the ranks.
In the end, one last question: where do you think people are usually going wrong with their retirement planning?
Yeah, so I think a few places. The first place is not planning itself. I think and the survey broadly brought it out that a lot of them, with the max, 10 years, will probably deplete is what their view is, their corpus, right? So they're not sure whether they have sufficient corpus to be able to take care of their retirement. So the first is, I think, not planning itself, not planning early is probably the second one, not starting early enough. And I think the third is the choice of avenues. And I think that, again, the survey that you just pointed out, the top, schemes, right, and investment avenues that people are looking at for retirement, they're not necessarily the best, right? So if you look at it globally, it'll be probably very, very different. So I think there is a lot more to go for the Indian market to sort of develop. Of course, the good part and what is sustaining some of these instruments is debt returns in India are higher, right? So people can actually afford to plan, say, FDs and stuff. But I would believe that over a period of time, that is also going to change. So it's important to keep in mind that, how do I slowly start bringing in these inflation beating assets?
Sure. I think a lot can be discussed as far as retirement planning is concerned, but then this is the time I have today, Anil, for this. We also have to move on to our viewer queries. So there are plethora of funds available in the market to invest your hard-earned money in, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? Let's take up all the questions with Anil. And the first question I'm taking is by email. Mr. Krishna Teja has sent us a question. Anil, I think you have the query with you. He's planning to invest in a multi-cap fund and he wants you to suggest whether he can do an SIP. Can he also consider a contra or a value fund as an alternate strategy? And he also wants to understand what's the difference or similarities between a contra and a value fund. And we don't have his portfolio as on, the current portfolio that he might be maintaining. But apart from that, what should be the criteria of adding on a multi-cap fund in your portfolio? And then later on, we'll talk about contra and value strategies that funds have.
Yeah, so it's slightly a generic question. So,
Right.
I'll try and answer it, to the best
Sure.
possible thing. Yeah, so definitely one of the, categories that is good to have in your basket is multi-cap funds. Now, multi-cap funds, interestingly, have a slightly higher risk as well because, they require to have, say, 25% in mid-cap, 25% in small cap, and a similar thing in sort of large cap. So that would basically mean that 50% will be, need to be between mid and small cap funds. In the current environment, I think that's a good thing to sort of use. And I think even going forward, if you are a long-term investor and you're doing systematic investments, I think there's not too much to worry about if you're sort of doing the multi-cap because it also has some bit of large cap. I'm assuming the fund house will also, based on the environment, they have some flexibility to move up their large cap or move it down, right? So that is something which it makes sense to have as part of the overall. I think, let's say an ICICI Pru multi-cap, for example, is a fund that one can sort of look at while you're investing, into this category.
Let's move on. Anil, we have a viewer online with us, Mr. Suresh. Hi, good evening, Suresh. Thank you so much for joining in. And you have sent us your query. You've been doing investments since 2018. What's the current portfolio that you have?
Yeah. Hi, good evening. I've been investing in equity mutual funds, direct mutual funds
Sure.
since 2018.
Sure.
I currently have 5 mutual funds, 5 to 6. Basically, one in large cap, one in large and mid, one in flexi cap, one in a hybrid, aggressive hybrid, and one in small cap. So the flexi cap is what I'm concerned about. It is an SBI flexi cap, and that particular fund has a very large overlap with a couple of other funds that I have.
Sure. Sure.
So I'm just wanted to understand, how do I go about this overlap? Should I withdraw the complete fund, or should I do a, STP kind of a thing within SBI itself to let's say a SBI Magnum Mid Cap?
Okay. All right, Suresh, a very smart question, because overlapping is something which is a very common mistake. Which happens due to over diversification. Also, that investors fall in as far as the strategies are concerned. So, Anil, over here, do you see his investment being overlapped, or is he over diversified as far as his exposure in equity funds is concerned?
No, actually, I think I must congratulate Suresh because he has been very clear on how he has broken it up into various categories, right? I don't find that much of clarity there with most investors. So that's first of all, I think, a very good thing to do. And he has broadly all the categories. Yes, there will be some overlap in, say, the flexi cap or the multi cap spaces, because say the large cap portion of it will sort of overlap with the large cap, and the mid cap may sort of overlap with the mid cap strategies that you have. So that is something which I think is okay, up to a certain point. Now, I'm not sure of the rest of his portfolio, so he can use some of the softwares, analytical softwares, to look at the overlaps. And I think if there's too much of overlap, then you can probably look at another fund in the category. The only issue that you have is that you may not have a control over, the portfolio of the fund house. So you may make some changes, and subsequently, some of those fund houses again go and, realign, and they again fall into an overlapping zone. So practically beyond a point, you may not be able to do too much. The categorization sort of helps ensure that actually you reduce the overlap. But yes, if you find that, I'm just saying, if there's an 80% overlap, then that fund doesn't make sense. Even if there's a 40, 50, 60%, I think that fund doesn't make sense. Then you can actually look at some other within the space, or in worst case, you may go back and realign yourself into saying, okay, either I'll be in a mid cap or I'll go in a large cap. The same scheme, I may take out that middle flexi cap layer and reallocate within the other segments.
Okay. One quick question, Anil. Do you think he should be investing 10 lakhs further in this fund mix itself?
Yeah, so I don't. I think it's a good idea to maintain that fund mix and continue to do it that way. Yes, at certain points of time, if you're able to track markets, sometimes large caps do well and sometimes mid caps do well. So far, if it's possible to do that, then you may even go back and say, in current market conditions, I think mid caps will do better. So I may just go back and realign, maybe in amounts that are already invested. I may not touch my SIP, right? But I may then go back and do some switches out there. But I would think broadly, it's a good strategy, and it's a very nice disciplined way to go about it.
All right, so that's a thumbs up from Anil. Suresh, all the best. I have Mr. Naqvi on the phone line with me, and the time is almost up for the show. But then quickly, hi, good evening. Thank you so much for sending us your query. You have invested in some funds. I just wanted to know the name of the funds that you've invested. The rest of the question is understood, but I don't have the name of these funds. Mr. Naqvi, are you able to hear me?
Hello, yeah, ma'am.
Yeah, hi, good evening.
Hello.
Can you just tell us the name of your funds?
Ma'am, I'm invested almost 5 to 6 funds. First is Mirai Assets,
Okay.
and second one is Quant Infrastructure Fund.
Which fund of Mirai?
Quant
No, Mirai
Infrastructure.
Asset, which fund? Mirai Asset, which fund?
Mirai Asset, wait a minute, ma'am. Mirai Asset is a tax saver fund, ma'am.
Okay. All right. Quickly, the next fund. I'm really short on time on this show. Can I please
Yeah,
request
ma'am.
you to
Yeah,
hurry up? Sure.
ma'am.
Yeah.
PGIM, yeah, ma'am.
PGIM, which fund?
Ma'am.
Okay, I think the call got dropped. Okay, so whatever information we have, Anil, how can you help him?
Yeah, I'm not sure he knows the scheme names, and that's typically a problem that we have when people give us inputs without the scheme name,
Yeah.
right? So it's difficult to look at it, but I think from whatever he said, tax saver, of Mire, I think you need to invest as much in tax service as you need. And that's my suggestion. And the rest of it probably, go back into diversified equity so you have more flexibility. Have allocation across various categories, like we saw, in the previous Suresh's thing. It's a good strategy to have some in the large cap, some in the multi cap, some mid cap and small cap. And I think you'll do well.
Will be all, and Mr. Naqvi, you can send us your question again with more details about the funds. And it's a wrap. Thank you so much, Anil, for being on the show and helping our viewers with all the nitty-gritties of financial planning today. And before I sign off, I'm going to leave you with our WhatsApp number and email ID where we keep waiting for your financial portfolio queries. Thank you so much for watching. Goodbye.